My name is Paula Masters and I am the Chair of the BUSSQ Board of Directors. I would like to officially open the annual members meeting for the 2019-2020 financial year by firstly acknowledging the Turrbal and Yagara people, the traditional custodians of the land on which we meet today, and to pay my respects to their elders, past, present and emerging. I would like to acknowledge and welcome my fellow BUSSQ directors here today. Sonia Byers has been a director since January 2018. She is the Chair of the Audit, Governance and Compliance Committee, Chair of the Risk Committee and Chair of the Remuneration Committee. She is also a Director member of the Investment Committee. Paul Bidwell is present with us here today and has been a Director for over 6 years. Paul is the Chair of the Insurance Committee and also a Member Director of the Investment Committee. Next we have Jackie Colley, who has been a Director of BUSSQ since August 2019. She is a Director member of the Investment Committee, the Insurance Committee and the Remuneration Committee. I would also like to welcome Emma Eves to our meeting today. Emma has been on our board since January 2020 and is a Director member of the Investment Committee and the Audit and Governance and Compliance Committee. Emma also sits on the BUSSQ Risk Committee. Finally, Grant Galvin is here today and has been a BUSSQ Director for 6 years. He chairs the Investment Committee, is a Member Director of the Insurance Committee and of the Remuneration Committee. I would like to thank them for their dedication and support of BUSSQ member interests. Also present is David Jewell, representing our company auditor, Ernst & Young. He joins us online, unfortunately unable to be with us here in person due to COVID travel restrictions. David has been with the firm since 1984 and a partner since 2002. He is a registered company auditor and meets APRA's fit and proper tests for insurance and superannuation auditors. Thank you to all the members who have registered for this inaugural annual members meeting. The purpose of this meeting is to give all BUSSQ members information about how the fund has performed in a difficult and challenging economy, changes to super law during the year and how we have implemented them, and the fund's future direction and plans to deliver for members. We hope that you leave the meeting feeling a little bit more knowledgeable about BUSSQ. This inaugural meeting is about you, the member. Members are at the centre of everything we do at BUSSQ. We are a profit for member fund with a duty to act in the best interests of our members. Every decision and every activity we undertake is based around what will be the best outcome for you. And events such as this is not entirely new to BUSSQ. Our strategy is to give the members the right information at the right time, with access to subject matter experts and to the executive team at our various events and webinars throughout the year. Speaking of the executive, today you will be hearing from the Chief Executive Officer of our BUSSQ, Linda Vickers. She will be giving you an update on the fund's operations and service offering to our members. Linda will be followed by our Chief Investment Officer, Simon Mather. Simon will provide you with the investment information and fund performance. After hearing from Linda and Simon, we will devote the rest of the meeting to addressing your questions. If you have a question you would like answered, please use the chat box at the bottom right-hand corner of your screen. It is possible that we may not be able to answer all your questions today. However, the minutes of today's meeting, along with a recording of the meeting, will be published on the BUSSQ website. The minutes will include all the questions received before and during the meeting, along with their answers. As with all member meetings and seminars such as these, we are required by legislation to let you know that the information presented here during this meeting is general information only and does not take into account or consider your personal objectives, financial situation or needs. Before acting, you should consider the appropriateness of the information to your needs or seek independent advice from a properly qualified professional. At today's meeting, we will not be able to answer any questions that we receive that are of a personal nature. These could be questions relating to your personal circumstances, such as a claim that is underway, or requests for advice on investment choice. However, if you do have a question pertaining to your individual account, we encourage you to reach out to BUSSQ through our usual channels. by phoning 1800 692 877 or by emailing super@bussq.com.au. My job and that of my colleagues on the board is to ensure that BUSSQ members retire with dignity. Delivering dignity also means delivering financial products and services that support you all the way through your working life and beyond. The outbreak of coronavirus and the market volatility and lockdowns that followed have presented everyone with unique challenges this year. Through this time, the Investment and Risk Management Committees and the Board of Directors met more frequently, strengthening the fund's ability to react to the evolving situation. The impact coronavirus had on investment markets worldwide was significant, but despite this, the fund achieved a good result for members' investments last financial year. This year also saw changes to the fund's Board of Directors. Long-serving director Wally Trohier retired from his role in December after 26 years on the board. We also welcomed Jackie Colley and Emma Eves as new directors nominated by the CFMEU. The end of 2020 sees a change to the executive leadership team. CEO Linda Vickers will be retiring after 22 years at BUSSQ. Damien Wills will be taking the helm. The appointment of Damien as CEO is just the fourth CEO appointment in our 35-year history. You will hear from Linda in just a moment, but I would like to take this opportunity on behalf of my fellow directors to thank her for the 22 years of service to BUSSQ. Her roles over this time have included employer services, risk and compliance, training, operations, and more recently, Chief Executive Officer. One of the most notable achievements at BUSSQ was to oversee the creation of Skylight Financial Solutions, a fee-for-service, affordable financial planning organisation to help BUSSQ members and their families get the right advice at the right time. We would also like to thank the entire BUSSQ team for their ongoing commitment to members and particularly for the support they have provided for our members through the challenges of this year. Lastly, we would like to thank each one of our members for your membership of BUSSQ, and we take this opportunity to affirm our commitment to putting your interests first. Now I would like to hand over for the last time to Linda Vickers, Chief Executive Officer. Thank you.
Thank you, Paula, and thank you to all the members who are joining us this afternoon. It's actually been a true team effort in our commitment to supporting our members this year. It has been a driving force in all we've done in the 1920 financial year. The fund has faced many challenges, but I'm proud to say that we have met these challenges, overcome them, and in a way that has put BUSSQ on the front foot and in a stronger position than ever. The fund's 1920 annual report is now up on the website. In the report, we outline our audited financial statements and our indirect costs to members. We are diligent in making all decisions in members' best interests and continue to reduce costs for members. We are pleased to say we received an unqualified audit and we finished the year with sufficient reserves to meet our legislative requirements. Funds under management is now sitting at over $5 billion, with 10% of that sitting with our income stream members. The annual report also details where your funds are invested and the managers that assist us in that investment. It is also pleasing to note that our dedicated arrears team collected $5.8 million of unpaid super in the last financial year. BUSSQ exists because not all members of the building and construction industry want to be a number. They want a fund that cares about getting them to retirement and which understands the roadblocks to a dignified retirement. BUSSQ is committed to delivering value to members in the right way, with members' outcomes the top of mind. This underpins all we do at BUSSQ. The BUSSQ's strategic plan is based around our reason for being, a profit for members fund with a duty to act in the best interests of members. In practice, this translates to the why of BUSSQ. We believe every worker deserves dignity and support through their working life and in retirement. BUSSQ continues to work towards providing products and services that are tailored to overcome the roadblocks to a dignified retirement that workers in the building construction industry face. BUSSQ will continue to leverage its comparative size to allow the fund to be nimble in meeting changing member experiences, expectations, needs and legislation. The biggest challenge that we've all faced this year is undoubtedly the COVID-19 pandemic. COVID-19 has put enormous pressure on families, individuals and businesses all over the world. BUSSQ has not been immune to the impacts of global uncertainty. However, the response to the pandemic from BUSSQ was swift and positive, and changes were immediately put in place to adapt and improve on our award-winning service and products. We were able to respond with agility and flexibility. The introduction of an economic stimulus package giving those in need early access to super called for the BUSSQ team to adapt quickly. To deliver the early release of super scheme, systems were put in place not only to ensure members who applied for early release of their super promptly received their funds, but to also ensure we delivered the scheme with rigour to protect members' retirement savings and protect against any potential fraud. I am proud of how our team embraced the challenges presented by COVID. As the country went into varying levels of lockdown restrictions in late March, the team quickly adjusted to working from home and adapting processes to ensure we could safely provide continued service for our members over the phone, online, and most importantly, in person. We extended our member response teams to support the early release of super scheme. Our member response team provides support to members experiencing financial hardship. This was done over the phone, over the counter, and face-to-face on site. BUSSQ were able to quickly enact their BCP disaster recovery plan. Staff were trained and ready once the call for lockdowns and restrictions was made by the state and territory governments. BUSSQ was ready with their plans to keep helping you, our members. The office was kept open with a skeleton staff to keep servicing our membership. BUSSQ staff continued with their business as usual in usual positions in member services, employer services, arrears, insurance, investments, governance and member response. Our business implementation team continued to process our members' requests for new accounts, changes of beneficiary, investment switches, insurance upgrades and roll-ins from BUSSQ from their home offices. To ensure we were complying with workplace and health and safety, we engaged an external consultant to ensure that our staff's home offices were well equipped, support them during the lockdown and to keep them safe. This work from home initiative covered all our staff working for you, the members, no matter where in Australia. Staff who could not continue in their usual face-to-face roles were redeployed to be of assistance helping members in other areas. As you're aware, the construction industry did not close down during this time. Building projects continued. BUSSQ has always made itself available to help members on site through our mobile super centre and toolbox talks. To be there for our working members, BUSSQ still visited sites where there seemed to be even more need for our assistance. COVID management plans were in place at these sites with sanitisation stations and social distancing observed, while BUSSQ was able to continue to deliver the message of how the fund was there to support you and not let you down during this time. It was so well received by all workers on site who knew they had not been abandoned at this time. I would like to once again thank my dedicated staff for their efforts in being there for our members during this very challenging time. BUSSQ, I'm proud to say, did not skip a beat in responding to the crisis and brainstorming on how we could best deliver for you as usual. During this time, BUSSQ staff adapted quickly to technology, enabling us to collaborate in the best interests of members in a COVID-safe way. Like many other businesses, we quickly learned how to use safe virtual meeting platforms while the office was in lockdown, like we're doing today. Next year, we hope to see you face-to-face at our members' meetings, and as we've done in previous years for our pension members. They say necessity is the mother of invention, and BUSSQ was certainly both inventive and busy, as usual, creating new ways to reach you. One of the new platforms we provided proved to be a great success, and this was our member chat. During a time when phone lines were busy with calls for assistance, BUSSQ was on hand in real time to talk to members online, even during the Easter break, and give them the assistance and information they needed. This reduced the wait time on the contact centre significantly lower than in other superannuation funds. Another initiative was to create electronic version of forms so that members did not have to wait on the print and mail services during this time. We now have over 30 member forms ranging from selecting your investment choice to making contributions for your spouse, which can be completed electronically. We also have an email platform from which these can automatically be emailed, pre-populated with your data. Not only does this innovation streamline services to members, it saves members money on print and mail and lessens the impact on the environment with the use of less paper-based processes. We routinely conduct satisfaction surveys, collecting members' feedback and measuring their satisfaction with interactions across the fund using Net Promoter Score or NPS. The fund has always achieved NPS scores well above the average of 30 that many companies aim to achieve. In April this year, amid the COVID crisis, market volatility and introduction of the early release scheme, our Member Services Hub received an impressive score of 76, showing members were very satisfied and willing to recommend us to others, a position we strive to be in. Early this year, a key focus for the fund was the Putting Members' Interests First legislation, which introduced changes to the insurance cover provided by super funds from the 1st of April 2020. Reforms aim to ensure that members are not paying for insurance and super they do not know about, or premiums that may unnecessarily erode their super savings. Super funds can no longer automatically provide insurance to certain members unless they are employed in a dangerous occupation. Recognising the types of occupations our members are employed in and the importance of insurance cover, BUSSQ worked to ensure the dangerous occupation exemption could be applied to our members and the fund could continue to provide members with default insurance. Unless a member advises us they are not employed in a dangerous occupation, we will apply the dangerous occupation exemption and provide the member with default insurance cover and confirm this within 28 days. Members may retain or cancel the cover by letting us know. A major change that will be implemented in this financial year is daily unit pricing. You gave us feedback during the volatility in February and March that you would like to see unit pricing more often than weekly. We've listened and we are now putting that in place for you. As we enter our 35th year supporting workers in the building, construction and civil industries, no one could have anticipated what was ahead. As Paula mentioned, I am retiring at the end of 2020. I've had a very rewarding time with BUSSQ, and I will be very sad to say goodbye. But I know the fund will be in good hands in the future with Damien Wills stepping into the role of CEO. Damien has been with the fund since 2016, and with a long track record in superannuation industry, he has the leadership and strategic vision to guide BUSSQ into the future. So thank you to all the members and employers I've worked with for the last 22 years. I've enjoyed every minute of it, and I look forward to actually seeing you next year as a member, myself, as a pension member, and hopefully see you at this venue as a live venue in 21. So thank you for your support for 22 years. I'll now hand over to Simon Mather, Chief Investment Officer, who will update you on the fund's investment performance for the 19-20 financial year. Thank you.
Thank you, Linda. Today, I'm going to be taking you through an investment update, focusing on how we've returned over the last financial year, but also touching on the future as well. So the topics for today, we'll be looking back over the financial year, how BUSSQ has performed. I'll touch on what we've been doing in the responsible investing side of the business. We'll be looking forward over the next 12 months or so, and I'll finish with a performance update on our performance for this current financial year. Also, please note that past performance is no guarantee of future performance, so when I talk about the fund's historic returns, please be aware this is no guarantee of future returns. Okay, so looking back over the last financial year, the financial year started very well. We saw an upward trend in equity markets, as can be seen in the two graphs on the slide, which show the Australian share market, the ASX 200, so the top 200 shares, listed shares in Australia, and also I've included the US market, which includes the S&P 500, which is the top 500 shares in the US market. From the beginning of the year to around the end of February, the Australian share market was up about 7%, and the US market was up double that, around 14%. This was as a result of improving investor sentiment around the world, but also some of the easing of the trade tensions between the US and China. In February, as news started to filter through about a COVID-19 issue, the impact it was having around the world, this started to impact financial markets. And we saw the Australian share market fall very quickly, and it fell around 36%, and the US market fell around 34%. This was from around the 20th of February down to the 23rd of March, when it bottomed. Globally, governments and central banks acted fairly quickly to try and recover or try and alleviate some of the impact of the lockdown in these economies. Closer to home in Australia, we have seen the Reserve Bank of Australia and government supporting the economy with stimulus packages totalling around $200 billion. The RBA cut rates aggressively in March with 2 cuts. This is out of their regular cycle. They took interest rates down to 0.25%, we'd never seen before in this country. It's now actually at 0.1% on the back of the cut in November. The aim of this was to try and cushion some of the impact of the economy closing down and the lockdowns we were seeing across the country. This slide here shows the performance of our underlying asset classes in the market, and from the largest listed companies down to the smaller listed companies. The returns were diversified by industry and within the market cap segment. Across all the market, not surprisingly, we saw healthcare and technology names perform really well, while the traditional sectors like energy and financials lost value. Consumer discretionary in small caps was a large distractor. However, stocks in the sector, in the larger end of the market, actually gained in value, and we saw this as people were shopping from home while they were in lockdown. Amid a struggling economy and record low interest rates, the biggest drag on our market over the financial year was the banks. And we saw Westpac, NAB and ANZ all decline around 30% during this period. The big miners also lagged the market, so BHP and Rio Tinto in particular lagged the market. Although some of those smaller mining companies like Fortescue, which is purely iron ore, defied the odds and enjoyed a strong year with the iron ore price surging following the Brazil mine disaster that we saw in 2019. Healthcare provide the most resilience over the year, with the largest contributor to index returns. So what sort of changes have we made over the year? We made a number of changes. During the first half of the financial year, we made some changes to the portfolio. We were concerned around the share market valuations, particularly in that 6-month period where we saw in a previous slide where the equity markets were so strong. And we were also concerned about the general global economies. We had in place some downside protection with the aim of cushioning some of a potential sell-off. And we added to the quality of the portfolio by investing in higher quality global investment companies with sustainable earnings. Some of these companies included the likes of Microsoft, Taiwan Semiconductors, GlaxoSmithKline, Unilever, Alphabet, which is the parent of Google, and Coca-Cola. With particular concern around the Australian share market, we were also looked to reduce our exposure to Australian shares, and we increased our exposure to global shares. This strategy outperformed and helped with the fund's positive diversified option returns, particularly in April when markets recovered strongly. This slide shows the performance of our asset classes over the last financial year, but also annualised over 5 years. Strong performance was seen in several areas, but from an outperformance perspective, we were particularly pleased with our share managers. Australian shares, or the ASX 200, the top 200 shares, was down about 7.7% last financial year, while our Australian shares was down just under 1%. So we outperformed the Australian share market by nearly 6.5%, so a pleasing outcome from our active investment managers. Within shares, both locally and overseas, it was actually the exposure to growth managers or growth style companies, particularly the technology companies, that performed well during the year. It wasn't just about shares. During the year, we saw some strong returns from agriculture and infrastructure. And within agriculture, it was the cattle prices. Cattle prices remained very high during the year. And within infrastructure, apart from the airports, which obviously was shut down predominantly, it was our investments in renewable energy, such as wind, due partly to the increased demand with people working remotely and having to work from home. During the early stages of the market sell-off, we managed to take some profit from our protection policy. Also, going into sell-off, we had been performing relatively well. And in the sell-off, we didn't give back all of the outperformance that we achieved in the first 7 months. So looking after our members' retirement savings, particularly in down markets, is something we are really proud of. So now I'll go on to how our options have performed. This slide shows the outcome of the previous slides, as returns of the asset classes flow through to the options for our members in super and our members in the transition to retirement phase. All the returns here are after tax and, where applicable, and after other management costs. Looking at the returns for the financial year, even though it was a difficult year, in the first column, we can see that all of the diversified options provided a positive return. And except for Australian shares and emerging market shares, all the other single sector options were also positive. Focusing on the longer term, we can see the 10-year returns for our diversified options are still pretty healthy. The balanced growth option returned just over 8% per annum over 10 years, and our high growth option was just over 9% per annum over that 10-year period. And that takes into account some really difficult times. This slide shows a similar story to super and the TTI returns. All diversified options in the income phase or the pension phase posted a positive return, except for, again, for Australian shares and emerging market shares. All of the other single sector options were also positive. And again, over the longer term, 10-year returns show that the balanced growth option returned just under 9% per annum, and the high growth option just over 10% per annum. So some really great returns over the longer term. So how do we perform against our peers? This slide shows an overview of the last 12 financial year returns of the balanced growth option against the super ratings median from about the GFC. As can be seen in the graph, with the exception of 2 years being 2010 and 2019, the balanced growth option in superannuation has consistently outperformed the median fund, as reported by Super Ratings. Over the 12 years, this has meant the option has outperformed on average by just over 1%, around 1%. For the last financial year, the median return was around negative 0.5%, so minus 0.5%, while our balanced option for our members returned 2.46%, outperforming the median fund by nearly 2.9%. As shown in the top corner, since inception, which was October 1985, the balanced option has returned an average return of 9.5% over a 35-year period. During this period, we have experienced multiple economic and stock market corrections, including Black Monday in 1987, when the US market fell over 20% in a single trading day. We also had the Asian crisis in 1997, the Russian crisis in 1998. In 2000, we had the dot-com boom. And then in 2007, we obviously had the global financial crisis. And this year, we've had COVID-19. This shows that it is time in the market, not timing the market, and maintaining a diversified portfolio helps you achieve a decent retirement over the longer term. So now I'd just like to cover off some areas that we've been looking at with respect to responsible investing. This slide shows the fund has focused on 4 United Nations Sustainable Development Goals. The Sustainable Development Goals, or SDGs as they're referred to, were adopted by all United Nations member states in 2015 as a universal call to action to end poverty, protect the planet, and ensure that all people enjoy peace and prosperity by 2030. Over the last financial year, BUSSQ has continued to focus on responsible investing. The table shows an increase through the year of the fund's capital allocation to those 4 goals. The increase was seen across shares, infrastructure and property in particular. We aim to improve on our responsible investing in the future, which will show through an improvement in our weightings in these areas. Now I'll just take you through each of the goals. So goal 7, affordable and clean energy. The purpose of this goal is to provide access to affordable, reliable, sustainable and modern energy for all. A well-established energy system supports all sectors from businesses to medicine and education to agriculture, infrastructure, communications and technology. In this area, we have investments in assets which provide renewable energy, such as the Bald Hills wind farm in southern Victoria. Goal 8, decent work and economic growth. The purpose of this goal is to promote inclusive and sustainable economic growth, employment and a decent work environment for all. Sustained and inclusive economic growth can drive progress, create jobs for all and improve living standards. Goal number 11, sustainable cities and communities. The purpose of this goal is to make cities inclusive, safe, resilient and sustainable. This includes basic services such as transportation and water. We have investments in public transportation and water infrastructure that treats wastewater and provides clean energy, clean water. Goal number 13, climate action. The purpose of this goal is to take action to tackle climate change and its impacts. The fund has recently undertaken a project with most of its investment managers to review how they assess and manage climate risk and how that impacts the portfolios they manage for us. So the next slide, I'll talk a bit more about the work that we've done recently. Climate risk. The climate risk assessment. Recently, we conducted a review of our managers and their strategies with the aim to identify climate risk in our fund's portfolio. This included information on how our managers assessed and managed identified climate risks, including reasoning for continuing to hold these investments that are deemed to be high risk to the categories I've listed. This will be conducted regularly to continue to identify any areas of risk in the portfolio and assess areas where positive impacts are being seen through projects such as renewable energy and carbon abatement with the fund's investments in agriculture. So this slide provides an example of some of the work being carried out by our investment managers. One of our property managers has been changing over lighting to LED. This has improved lighting and safety within shopping centres and car parks and also reducing energy consumption. They're also in the process of putting solar power on shopping centres' roofs and also on car park roofs. Also, installation of smart metering allows them to identify issues sooner than previously allowing issues to be rectified. And this means that when an issue has been identified, they're able to change and adapt in real time. One of the areas they're also looking at is the amount of waste that they generate and also the water consumption. So looking forward, what does the outlook look like over the next 6 to 12 months? We remain cautious. However, globally, governments seem to be committed to continuing the stimulus that we have seen already over the last 8 months. One of the keys, obviously, to this recovery is the availability of a vaccine. And each day, we appear to be getting closer to a viable vaccine. This vaccine will obviously need to be effective and provided initially to the most at risk in our community. Obviously, the US election, which we've just gone through, seems to be reaching out an outcome with a Democratic win. The likely outcome going forward, with the Republicans trolling the Senate, will be a moderation of some of those tax hikes that the Democrats have already talked about. But we should also see some positive outcome with the US and China and their trade war. So this stimulus is obviously going to be impacting debt levels. So this is obviously one of our concerns going forward, the amount of debt. The graph on this slide shows the increase in global government debt as a proportion of GDP. Similar to post-World War II, however, this period we saw significant growth and low inflation. Today's environment does actually differ. The concern is that the high level of global indebtedness is likely to add uncertainty to the outlook and increase the fragility of the global economy. As mentioned, I'll now provide an update on how we've been travelling so far this financial year, and this is to the end of October. As shown in the graph, so far this financial year we have returned just over 3% for the balanced growth option, and this has been outperforming the super ratings median return, which is around that 2.5%. So those first few bars there, you can see financial year to date, we've performed well this financial year. But also, as shown over the longer term, we still consistently outperformed the median fund. Going forward, we will continue to look for opportunities that provide a positive return for members, while also looking at diversifying the existing portfolio. Thank you. I'll now introduce Damien Wills, who will come and cover the questions that we've received so far.
Thank you, Simon, and welcome to question time. We've received several questions in advance from members, and the first couple are actually related to investments. So the first question: what is the current exposure of BUSSQ's investments to fossil fuel industries? Have you undertaken a risk assessment on the impact of these investments, and how will it affect the members' funds? What is BUSSQ's plan to combat climate change? I do not want to see my investment used in supporting these industries that will worsen the current climate. I'd like to bring Simon back to answer that question.
Thank you for your question. As mentioned in my presentation, BUSSQ has been working on our approach to responsible investing, and this is what we've been doing over the last few years. And we have made significant progress, but recognise there is still work to be done. One of the more recent pieces of work we have conducted is around the assessment of climate risk in the portfolio. This involves surveying most of the fund's investment managers to determine what measure and process they have in place to identify, assess and manage climate risks. And really importantly, once they have identified it, their engagement activities to manage these risks. The outcome of the survey was pleasing to see that all managers had some level of acknowledgement and process in place to identify and manage these risks. Managers where we identified that they needed to improve, BUSSQ will be engaging with them to further understand the areas that they can improve on, and we will continue to monitor their progress as they go. This review enables BUSSQ to be able to engage and better understand where climate risks may present in the portfolio. This will be conducted at regular intervals and will be a key part of any future investment by the fund. On the exposure side, the fund does have some exposure to fossil fuel industries. If I look at the energy sector in the local and international share market, locally it accounts for about 4% of the index, and globally it accounts for about 3.5% of the index. We currently have exposure to about 3% in the Australian shares and about 1.4% internationally. But if I look at it at a total fund level, this is around 1.3%. While it is relatively small at the total fund level, we recognise there's opportunities for the fund to look to reduce this, and will be an area that the fund will continue to look to in the future. Climate-aware investing is not only a means to reduce climate-related physical risks, regulated risk and stranded asset risks, but also to potentially improve return by opportunistically looking for investments in renewable energy and other areas like those I've talked about so far today.
Thanks, Simon. A second question on the same theme. I would like to know more about the ventures being invested in and how they are building a cleaner, greener future moving forward? What part does environmental sustainability play in the investment decisions? I am happy with BUSSQ, but recently considering a review based on choosing an eco-conscious fund.
Thank you again for another great question. As mentioned in my previous question and my presentation, the fund has been working on its approach to embed responsible investing in its investment process, both prior to making new investments, as part of reviews, and also in ongoing conversations with our existing managers. It is part of the review, along with other factors such as risk and return drivers. Recent work on climate risk will continue to evolve over time. If you're invested in one of our diversified options, so either balanced growth, high growth, or defensive, you will have some exposure to infrastructure. And within the infrastructure, there is investment in wind power generations. These include on the south coast of Victoria and on the coast of Western Australia. Also, our agriculture managers are looking at ways to take carbon out of the atmosphere. This is through their carbon abatement projects. And also, as mentioned previously, our property managers are putting in place solar power on rooftops where possible, and also reviewing their waste management to increase recycling and minimise waste going to landfill. These are on the list of areas for sustainability within our fund. The fund took a view a few years ago not to just offer a standalone sustainable option or an SRI option, but to embed sustainability or ESG across the whole of the fund, recognising that the way we invest for the longer term should take into account not only return enhancing potential, but also recognise the risk posed by ignoring the impact of climate change. Thank you.
All right, our next question. Is BUSSQ continuing to stand alone rather than be taken over by a larger superannuation and allocated pension provider? We, speaking for members, have enjoyed a wonderful service from you so far, and it would be disappointing if we were to put in someone else's hands. A great team, keep well and safe. I'd like to pass to Paula, our chair, to provide a response to that question. Thank you.
Thank you for that question, and we're very pleased that you are happy with the existing arrangements for governance and management of BUSSQ. I can assure you there are no existing plans for BUSSQ to merge with any other provider. In every decision we make, we must consider members' best interests. And to date, there have been no positive or better outcome identified for members in any merger proposition that betters what we are currently providing. Rest assured that if there is an offer put on the table, the board would take all measures to ensure BUSSQ members' interests are served in the process and by the outcome. A merger proposition and the entire process is very labour intensive and extremely time consuming. Any such plans would be communicated to members before they had to ask. For now, the answer is no.
Thank you. Our next question. Does the board direct their fund managers to vote their shares at the AGMs or EGMs, and if not, why? Simon, if you could answer that question.
Thank you again for that question. BUSSQ takes its shareholder engagement responsibilities seriously. So therefore we instruct all our investment managers to vote at all AGMs and EGMs. If you want some more information on our voting, can be found on our website by looking at our proxy voting page. The web page is interactive, so it can be searched by dates and individuals, and also by individual companies. So just go to our website and you'll be able to find some more information about how the fund has voted on different AGMs and EGMs.
All right, our next question is from a member who asks, I am basically debt-free and my wife and I have approximately $200,000 super each and $100,000 in the bank. Can I afford to retire as I am 63 years old and not entitled to the pension as yet? Well, thanks for the question. It's a great question. We always get a question of when can I afford to retire by our members, but unfortunately, as it relates to personal advice, we cannot answer it in this forum. However, we can arrange for our advice team to give you a call. So leave that one with us and we will be in touch. Next question is, a situation I personally find myself in and have concerns about is, if a member was to lose their job on a Friday and have an accident on the Sunday, are they covered by insurance as they were not officially employed? My understanding is premiums are continually paid to our insurer for a period of 6 months and ongoing until they reach a decision. It is like having home insurance and not being covered whilst at home. It's a great question, and I'd like to pass to Linda, our CEO, to provide a response to that.
Thank you for that question. I know insurance can be confusing. However, we can't discuss individual claims in this forum, so our claims team will be in touch with the member to discuss that particular circumstance. What I can do is provide you with some general information about how our insurance offer works. There's 2 types of disablement insurance in our group risk policy. One is temporary disablement and one is total and permanent disablement. Temporary disablement covers you if you're unable to do your own occupation. For instance, if you're a crane driver, you can no longer be a crane driver. And it will cover you during your period that you are sick or ill or disabled. The other is total and permanent, which covers you when you are unable to do any occupation. So if you're a crane driver but you can still do another occupation because of your previous training or experience, or because of the type of illness or accident you have had, you still may not be covered because you can still work in any occupation. Both of these definitions are linked to you being employed. So there's an occupation or a salary that is what is linked to the disablement, which means you must be working at the time you are sick or disabled, or left your job because you were sick or disabled, to have full cover. If you are not working when and you want to claim for total and permanent disablement, we do have a second test. That's called the activities of daily living. Now this means that you're unable to do some of those activities day to day, such as feed yourself or dress yourself. We automatically apply that second test if you do not meet the first test to be total and permanently disabled. Our death cover is paid whether you are employed or not. If you are covered for death cover, it doesn't matter, you are paid. Premiums are continued to be deducted because during the claim period, we're not sure if that claim is going to be successful, so we don't want your cover to lapse. And also, quite often if you are paid a disablement benefit, you want to continue your death cover. So we continue to deduct premiums until the claim process is completed, and then any premium adjustments are worked out then. Our insurance and guide is on our website, and it does go through in all detail what our insurance offer is about. But we highly recommend that members review their insurance pretty regularly to make sure that the amount of cover they've got is adequate and it does meet your individual needs. If you want to discuss anything in particular about your own personal insurance needs, please call us and talk to one of our specialists, or send us an email at super@bussq.com.au. Thank you, Damien.
Thanks, Linda. Another question in relation to insurance, and I might be able to take this one. It says, I'm divorced with young children and would like to ensure my kids are provided for in the event of my death. How can I do this, and how can BUSSQ help me? This is a question that comes up a lot when we're talking to members, and BUSSQ thankfully has a solution for members that find themselves in this situation, and you can ensure that your super and any insurance benefits that you have goes to your children as an income stream instead of as a lump sum to an ex-partner and for the benefit of your children. So members can complete a binding beneficiary nomination form with BUSSQ, and it's to a child income account. And this guarantees that regular income payments can be made to the children for their benefit in the event of your death. Any balance remaining when the child reaches 18 or becomes no longer financially dependent can then be paid to them as a lump sum at that time. So this solution is a great way to ensure children receive the full benefit of any death benefit proceeds in personal circumstances such as yours. And this is our final question, I believe. There has been a lot of press about super funds liquidity, and I was wondering what was the liquidity position of BUSSQ, and are there any pressures that there may be in this area? Simon, let's turn over to you.
Thank you for that question. And yes, there was a lot of press around super fund liquidity. So back in February, March, obviously when the government announced, but also with the sell-off in equity markets, and the government announced the ability for members to access some of their retirement or their super savings to meet the early release scheme. It's something that we actually internally, the investment team and the executive, actually focus on really strongly. We managed the liquidity very closely. We didn't build up a big liquidity buffer ahead of any drawdowns or any early release. We actually instead intended to remain fully invested as much as we can. So as you can see in our returns, the return for the balanced growth option, where the majority of our members are invested, we had a pretty healthy return. And that was partly due to having a really, really good close eye on liquidity. During that period, we were able to meet all early release payments. We had no issues with liquidity. We didn't have to sell anything in a forced way where potentially other people may have had to sell assets in a rising market. So as again, I say we remained as fully invested as we could and just managed that liquidity. And again, we met all the requirements that were needed of us. Thank you.
All right, well, thank you to all the members who have sent in questions today. I think that's all the questions that we've received at this time, so thank you. We will be publishing the minutes of the meeting, which will include some of the questions and putting those on our website. So that brings us to the end of our annual members meeting. I would like to take this opportunity to thank all of the BUSSQ members who have joined us online today. We sincerely hope that you leave this meeting with more information and understanding about how your fund is managed. Do not forget that BUSSQ is only a phone call away. If you can contact us on email or even through our website should you have any further queries about today or your superannuation in general. I would also like to thank our board, our executive team and our auditor for their attendance today. Thank you.